Well, that's a good morning to everyone, and good morning from Maya the dog barking here. So, cheers to St. Patrick's Day, retail trading team. This is your routine debrief, and I am not wearing any green. So as not to get pinched, I'm gonna go find some greens to stand by. Okay, so as some of you may know, I am on the road at my parents' house. So if you've been listening to these briefings, that's why we have a bit of a different schedule, look, technology problems, all that good stuff. But here's my green St. Patrick's Day celebration. So cheers to that, but I'm going to drink coffee instead of whatever's in there. So let's jump right into it. On this lovely OpEx Friday, I'm just going to start with the warm up and we shall go from there. Uh, those of you who watched yesterday's warm up saw that I moved Barb back into simulation for a little bit just because I was um, tired of taking the losses. And if any of you followed Barb yesterday, you saw that she produced about $10,000. So that was what we call an example of Murphy's Law, once again in celebration of St. Patrick's Day. And I think that's pretty ironic today so far. She's doing great as well. So, um, that's just kind of what happens. Usually, if you sit through a drawdown and you can handle it, it pops out the other side better than ever, and that's what we're seeing here so far. So I'm just gonna make a couple coins, some pots of gold, we'll say, um, just to kind of get myself back to even, pay this month's expenses, and then we'll go back into Barb Live. Ironically, like as I said, Live would be doing pretty good right now. So just want to point that out. You can follow Barb's progress here. Yes, not pointing it out to complain, although as you can imagine, I am a bit saddened by by my decision. But yeah, you can follow Barb's progress here. It's all in this lovely little trade log. You can see the most important metrics along the top, and most importantly here. I know the view is a little weird on this, by the way. I'm seeing it on my screen, so I'll zoom in just a tad. There you go. Much better. Then along the bottom here, you can follow the results-based assumption forecast, a Mark Minervini metric system, I guess. I don't know if you'd call that a metric system. A nice little statistical thing. One second, the dog's barking at golfers. It's rude to bark at golfers, my dear border collie. Anyways, so yeah, that's Barb, and we're going to continue moving forward with her. She's looking good again today. Last I checked, looking good. So past 2 days are great. Wasn't a fun drawdown. In fact, we did hit our max drawdown from high at 13,516, including within that the worst intraday drawdown. So it was just a really steep drawdown, more than what I've seen. And then yesterday, you kind of see us start to emerge from it, and we'll see what happens today. It could be kind of one of those rare back-to-back double big winning days. Again, we'll see what happens, but that's Barb. If you want to follow along and learn more about that strategy, you can go to the link in the description, that routine trading folder and the routine day trading sheet. You can see what's going on with Barb, and you can also see what I'm doing with scalping. So I'm just going to scalp a little bit. Like I said, I want to make a little bit of money back in the personal account. Once again, I am aware that Barb would have done that herself, yet I just need to be able to pay the bills. And when you're down, when you're a full-time trader and you're down a good bit in a month, sometimes you need to just go back to what you know, what works. And I'm going to keep justifying my way out of what seems to have been a uh, poorly timed decision. Anyways, enough on that. So let's jump into the actual narrative and see what we got cooking today. I can click the correct tab here. So you had a nice look overnight. So we had um, a nice move down, and it was also balanced. So you didn't really have what I would consider that significant bull fuel to start the day. You obviously saw that trap that they like to do right at the beginning there, where they push it up and then falls back down. That's also probably a component of OPEX. OPEX is usually pretty choppy, so a trend would be out of the ordinary for today. So we'll see what happens there. I'm really looking for a fake break here to get that nice final trade for me, a final scalp trade of the day, and I'll call it a week after that. So we have that potential rotational profile. Really, it will go as we move to the TPO. You actually see that a potential double distribution is setting up to the downside. This has been a quite a, to me at least, surprising and significant down move to start today. So we'll go from there. Open auction, obviously, in the first 30 does not really give us any insights, and so we have to go straight to the levels, straight to our expected move zones, which you can find on this sheet. Once again, in description to the video, this is the warm-up document. So moving on to the price action, jump right into the macro chart because we are I think size of shoes it seems here. Let me maximize that. Okay, so what's going on in the macro chart? Once again, rejected at that trend line. So we had kind of that on a daily, you could say that fake break above, and now we're pushing below. So we'll see where we close today. Between these two trend lines, again, it's chop. You have that yearly VWAP there. Really, that rejection was at that 200 SMA, so we'll see if it holds. Yet on the macro look, at least in my opinion, we are in that consolidation area where there's room for a good amount of indecision. So again, I think once we do start to break below this trend line again and make lows, that's when we'll continue that push down. But as it stands, we're kind of stuck between the two sides. So you have the underside of that descending trend line from that October 13th low. I'm going to actually correct this because with the contract rollover, we had a bit of a, I didn't even notice this, so we do these briefings, huh? Okay, so we're still below that. I mean, nothing really changed, so we didn't actually quite hit it on this new contract. We got rejected at a 200 SMA before, so just something to watch there. And then we have to fix it on the upside here. It's going to be a little bit trickier because we don't have the data that goes back. I could obviously load it, but I think it's fine to just do it this way. Stand by, I'm just going to redraw it all together. Something like that, that makes more sense. And you can see we're now below both. Let me make sure I didn't make any technical errors here. I'm going to go peek at my SPY chart if you don't mind. Got going on there. Just got to make it sure everything's nice and accurate for everyone here. We take a look at the SPY chart because it is slightly different. Still below that descending trend line. Let me just draw it out here on a weekly. Okay. So as it stands, we're actually a little bit above it. I'm a little bothered by going on here. I'm going to have to play with the data. I'm probably going to add a SPY chart for the macro look here. So just so you know, we currently are above it. And then intraday, let me just go and look at this intraday. So that's really at about 385. What I'm going to do, I'm going to add a SPY chart to my actual chart book package here, just because especially with this new contract, the discrepancies are pretty significant. So this macro look's going to change, but the important thing to remember right now is that we are below that descending trend line. That doesn't change. That's really the most important one, and we're kind of consolidating around that 385 level in SPY, which is going to be important going forward. Once again, after this briefing, first thing I'm going to do is get a SPY chart in here because it seems that that is going to be necessary. So um, that'll be a nice change to look forward to tomorrow, and it'll give us a nice little diverse look, we'll say, on that macro view. So, uh, moving forward to kind of look at what is, I think, most relevant to you all is going to be this TPO today. So I'm going to go ahead and expand the screen. Watching for that fake break, by the way, if we do get that push above, really what I want to see is a close above this line. So if anybody who's looking at that routine day trading document and wants to get involved with that fake break, I want to see a close above this candle. So if you want to get in early, I think you could look for a break here, but I really want to see the pop back above that overnight low and confirmation by breaking that candle there. And I think that will give us a nice maybe 10-ish point run. And for me, that'll conclude my day. And yeah, but so before that, we do have to look at the TPO and see what we got going on here. You can see a mess, lots of singles, lots of junk going on here. So it's really probably best to zoom in a little and just look at the past few sessions. So really yesterday, not even few sessions, past two. So just kind of look at yesterday's RTH action overnight, and that's going to help us, I think, have a good idea of what to look for today. So first thing is downside targets, pretty easy. That 39.20-ish single is going to be your first stop, and then we'll be looking for that prior day low. Fake break there, and if not, that 38.90 area is going to be that naked POC. So that's a look to the downside. Like I said, you can see this this developing double distribution on the TPO here intraday, which the pivot for that is ironically there's a single and a naked POC, that 39.70 area. As we know, 39.70 has been super important all week, and so it only makes sense for it to continue to be important. So right now we're a little overextended. You can see the excess there. So watching this double distribution look to see if that continues. And in fact, I'm going to move our TPO from double distribute or from rotation into that double distribution look. You can see just live we saw that single pop in as well. So this looks pretty darn bearish to me. Let's take a look at the price action chart. I'd like to see kind of a retrace to get involved. So as I said, first thing we want to look for is that fake break. Fake breaks are always the best because what these traps are. When you go into the excess beyond the overnight low, overnight high, often prior day high, prior day low, these are really liquidity traps for the bigger institutions and big players. And so for the scalps at least, you kind of want to be on that side. Yeah, it's looking like they do have that continuation, and that's being supported by the TPO. So again, just kind of note our major levels here. Obviously, that 70 area is the pivot. Right now, we just put in another single at that 50 area. And finally, as we move down, you have a lot of room below here. So just kind of note that. If you do use a TPO, kind of watch that double distribution look to see if it holds. Let me go to the intraday chart. So we got going on here for our own purposes. Very good. So now we can move to volatility, and I think that's going to round us out with the price action and everything else for today. So what's going on with volatility? You can see we're kind of in this big channel. I'm in fact going to get rid of this line. There's just too many lines on this chart right now. So we're going to move. We have the high there. We have our local high. If I can get it good. We have our local high here. And really what I'm watching as we move down, let me just kind of see where that's tracking. I'm going to move this up just a little bit, just so it's nice and clean. So we'll make this a zone, or I'll make this a zone. Again, outside of the briefing, just so don't waste your time here. But what I'm watching is this wide channel we have going here. So right now we're testing kind of the top side of it, which is why I do like that fake break look. If we can pop back in to that 50 area, take out that single, and kind of start cleaning up that double distribution look. I'm watching how we react to this channel volatility. What's interesting is, so a lot of people tell you it's a chart crime to use any technical analysis on volatility, and sometimes I agree, but I think when volatility gets higher, it does respond pretty nicely. And you can see this line. This line's been here since whenever we hit here, so since yesterday early in the morning, and it's watching it respect it there, and you can see it on this side, same type of thing. So I think this is a nice channel. It's obviously super wide. A lot can happen. Yet as we test the top here, I'll look for that either rejection of volatility followed by the push up in the market, or if we start to break above and make a move toward that high again, is when we'll probably see that follow through. And just going back to that TPO chart, you'll see that move toward the 20 and potentially even back to 3900, 3885 area. So that is what I got. So that is what I have for you in price action. And let me just go through my cute little notes here, see if there's anything else to cover. Not really. I'm going to get that SPY chart. I think that's going to be super helpful for that macro analysis. I'm really surprised at how different the new futures contract is relative to that. I know there's a bunch of nuances within how that stuff works, so it makes sense. So I'm going to put a SPY chart on here, and that's going to be our new kind of macro toy, we'll say. And besides that, I'm going to move the live trading at least until I finish to Twitch. No music still as I'm on the road yet. We can hang out, trade live if anybody wants to talk, and watch what happens there. So Twitch and everything else is again in the description to this video. The best place to engage with me is going to be the Twitter at Routine Trader, and I'm going to emphasize what's going on with this double distribution because I think that's the most important thing to watch for the day. And so just watch for any updates there. Like I said, I'm just looking to scalp, finish out the day with one more trade, and I'll keep you posted there. Barb will be running, so the Barb results will be up at the end of the day, and we can see just how much money she's going to make on this lovely Friday. So besides that, the newsletter is going to come out right after this video, so subscribers can look for that in your inbox. And if you're not a subscriber, I encourage you to get involved there. It's nice, neatly packaged routine trading content for your everyday day trading needs. And besides that, you can also throw comments in the comment section of this video itself. So if you did enjoy today's content, choppy, again, apologies for the disorganization and kind of eclectic nature of these briefings on the road. I'd still appreciate the like though, if you don't mind. That does help with YouTube's algorithm. And yeah, so we're going to trade from here. Again, watch how this TPO moves. If you don't have a TPO chart, I just want to point out the levels one more time. 3890, 3920. I know that's a wide zone there. So really what's key to watch here is how do we react to the bottom of the value near that 3952 area? Do we pop back in? Do we clean it up and then move toward the day's POC at 3970 and that other single there, or do we get rejected and move back down? So double distribution looks are super important. You can see yesterday you had a similar look to the upside. And you can even see last night, same type of thing. So just be watching these major levels. If we do make a run, obviously 4,000 is where everyone's sights are. So it's OPEX, things get choppy, things get trappy. So stay nimble, as they say, and of course, stay classy until we meet again. Have a good weekend, everybody. Cheers.